Hi, welcome back to Numerix Video Blog. I'm your host, Jim Jockel. Joining me today, Paul Rawati, Director of Research at Alphacution. Hey, Paul.
Thanks, Jim. Good to be here.
We've been talking a lot about quantifying transformation. In our last segment, we just talked about kind of a use case or a case example around that you built around Deutsche Bank. Fascinating. So if you didn't see that, please check out our last segment. I want to talk and conclude our conversations on the following question. All this investment that's being made, what, from an institutional standpoint, what's the lag? What's the lag time to start seeing that return? I'm spending all this money. In your example, we spent over $90,000 per full-time employee. Right, we started to see that decline into the $84,000 range of that investment. But at what point in time is that going to ultimately hit the balance sheet in terms of ROI?
In the case of the largest players, if I had to bet, it would be at least 2 years, where you have enough confirming indicators. That would be essentially 8 quarters of performance. And the volatility or the variance around that estimate has to do with the business cycle. So when I'm looking at the modeling of these banks and their technology spending patterns, and developing a new language, different kinds of analytics that allow us to not only give you to compare a company with itself, but also to compare a company with its peers and the broader ecosystem, it takes several years. I mean, our model for banks alone has 11 years of data for 58 of the largest banks in the world, and several data points and several analytics per model. So it's quite a robust effort to look at what's really going on below the surface. However, we can't take away the business cycle. I mean, if some event happens, if there is some crisis, if there is some market-moving event that cannot be muffled by quantitative easing or series of regulations or whatever the broader mechanism may be, you get these distortion in the analytics that is more business cycle related than technology strategy related. And so therefore, really the broader answer to your question is that the lag could be 3, 4, 5 years before you've confirmed that a particular investment has actually taken hold.
So how does that impact the thinking, right? We're talking multi-billion-dollar projects. We're talking individuals now, regulators are jumping in, looking at operational risks around some of these particular projects. Is there a lot of start-stop in terms of this investment? How do I, if I'm CEO of X bank, how am I selling the board that and say, don't worry, in 5 years from now, the balance sheet's going to go crazy?
Well, the complexity of these decision-making challenges can't be underestimated, and we tend to underestimate. It's easy to be cavalier about judging a large, complex, and diverse organization about how slowly it may move. But in context of, say, a startup that has this disruptive theme, they have a blank canvas. They can make all kinds of decisions, and there's no legacy to deal with. As the old saying goes, it's much easier to build anew than to renovate. Renovation is like, and I used to say this when I was in prop trading myself, we had a car on the track and we had to swap out the engine while we were running the race. That's very, very difficult from a strategy perspective and a management perspective. There is no luxury of start and stop. So you have to allow the car to continue to go, even if the engine is not optimized, or in some worst cases, in fact, is defective. And you have to plan in parallel and build things in parallel and switch over once you're confident that the new functionality, the new gear in the engine is able to sustain the load while you pull this other legacy piece off the track. Now, there's a lot of people involved, there's a lot of politics involved, as we've talked in previous segments. There's a lot of cultural toxicity that comes into these decisions. It can't be done in a vacuum. It's very complicated.
Well, Paul Rawati, I want to thank you so much. Paul Rawati is Director of Research at Alphacution, sitting down on his thoughts as it relates to quantifying transformation. And 2 things that I've learned today. Paul, big on TCO and understanding it. short on ping pong tables.
I'm very short ping pong table.
Well, if you didn't catch that, watch an earlier segment. We'll be sure you'll bring you in on the inside of the joke. Thank you so much, Paul.
Thanks, Jim.